There's really only 4 asset classes: stocks, bonds, currencies, and commodities. But innovation is the essential asset class that creates those other 4. And that's the beauty of Bitcoin. And that's why I wear the orange pants. So Bitcoin's a really, really good idea. Why? Because the most powerful people in the world hate it, right? Jamie Dimon says it's a fraud. He has 900 people at JP Morgan working in blockchain. 900 people on his payroll working for this thing that he publicly calls a fraud.
Mark Yusko, the CEO and CIO of Morgan Greek Capital, explores the topic of innovation as an asset class. Early in a tweet, he said, "The greatest wealth is created by being an early investor in innovation, making that investment requires believing in something before the majority of people understand it. You will be mocked, ridiculed, and criticized for your non-consensus action. It is absolutely worth it." During times of economic stress, when traditional currencies and also the bonds are losing value, Bitcoin, the biggest financial innovation of fourth industrial revolution, is breathing new life into investors. While gold has centuries of history as a universally recognized store of value, Bitcoin has rapidly gained momentum since its inception in 2009. Both assets are scarce, but Bitcoin is more volatile. According to the report, Bitcoin's annualized volatility has declined from over 200% in 2011 to around 70% in 2020. Yusko believes that volatility is not the enemy but rather a friend. He suggests that owning volatile assets that are uncorrelated with one another can be a strategic approach to investment. On Tuesday, Bitcoin has added nearly $1,000 to its value following a sharp increase in volatility within the cryptocurrency market. Yusko pointed out that Amazon stock displays a level of volatility comparable to that of Bitcoin. However, he emphasized that despite the declines, very few people sold their Amazon stock because, over time, the value of their Amazon investments appreciated significantly. Amazon is a large-cap growth stock in the retail industry. Amazon stock has run up hard this year, gaining 70% from January 1st through mid-September. Now, let's shift our focus to a video. Before we get started, make sure to subscribe to the channel and click the bell icon for the latest updates.
It's a theft through this devaluation of currency. And that's the beauty of Bitcoin. And that's why I wear the orange pants. If you bought Bitcoin in Venezuela 4 years ago, you didn't lose all your value.
Right.
Because the Bolivar went down 99.99%, but your Bitcoin went up. Because we don't price Bitcoin in Bitcoin. The thing about Bitcoin, it's like gold. An ounce of gold is an ounce of gold. If I had an ounce of gold for the last 5,000 years, I could buy a fine person's suit. From a Cleopatra's time, to a suit of armor, to a zoot suit in the 20s, to Savile Row today. If I took a single ounce of gold and I went to Savile Row, I could get a fine person's suit. But we don't price gold in gold, right? We price gold in dollars or euros or yen.
That's right.
So what's happened to the price of gold since 1933, when gold was made illegal? It was actually illegal for us, citizens, to own gold from 1933 to 1975. At the time, it was $33 an ounce. Today, it's $1,900 an ounce. The gold didn't get better. The money got worse. And if you think about, like, we have this thing called money illusion. Like, y'all think your stocks are at all-time highs, right? You look at your 401k balance and it's going up. That's because we price it in a depreciating asset. If we priced stocks not in dollars, but in gold, they're dead flat since 1997. That's money illusion, right? We're being sold a bill of goods on the value of this thing that we're paid. And back to Jimmy's song, if you're paid in dollars, then again, charged word, but the masters can steal your wealth by devaluing your currency. If you're paid in Bitcoin, they can't, because one Bitcoin is one Bitcoin. But we don't price Bitcoin in Bitcoin. We price Bitcoin in dollars. So, and you say, but Mark, it's so volatile. Like, yes, volatility is an indication of uncertainty around future outcomes. And you guys probably don't know this, but anyone own Amazon stock? Probably do, right? Amazon stock and Bitcoin have the same volatility. In fact, I should have worn my t-shirt that says embrace volatility. Volatility is not your enemy, it's your friend. You want to own volatile assets that are uncorrelated with one another. But if you think about the volatility of Amazon stock, Amazon's been a public company for 27 years. It has an 80 vol, same as Bitcoin's. Every single year of 27 years, Amazon has gone down double digits, including this year. The average is 31%. So every year, on average, for 27 years, you've lost a third of your money. When was the right time to sell Amazon? Well, that would be never. How many people bought Amazon at the IPO 27 years ago and still hold it today? There's only 5 people in the whole world. Jeff, mom, dad, ex-wife, and Bill Miller, whose cost is 7 cents. Yep. So those people got the joke that the volatility is not the enemy because the value is accreting.
Right.
The volatility shrinks over time because the uncertainty, when he was selling books on the internet, people thought that's a dumb idea. When he was selling books and records, like literally records, vinyl albums, most people have no idea what I'm talking about. But on the internet, people thought it was a dumb idea.
Right.
Now, every single person in this room probably used Amazon in the last week. It's pretty amazing. So this transition of what is not understood and acceptable to eventually what becomes commonplace is what drives true wealth creation.
The journey toward the establishment of a U.S. spot Bitcoin ETF has been marked by considerable challenges. The SEC has consistently rejected all 33 applications from over a dozen different filers, starting over a decade ago with the Winklevoss twins' initial attempt for approval. Nonetheless, recent developments indicate that we may be closer than ever to the realization of a spot Bitcoin ETF. The entry of BlackRock into the scene in June, boasting $9 trillion in assets under management and an impressive application track record, is a significant development. Additionally, Grayscale achieved a resounding court victory over the SEC, leading to the vacating of the previous denial of its ETF application. Furthermore, the recent approvals of leveraged Bitcoin futures ETFs and Ethereum futures ETFs suggest a shift in the regulatory landscape, bringing the goal of a spot Bitcoin ETF within reach. Mark Yusko suggests that a major asset management firm, such as BlackRock, could potentially be the first to obtain approval for a Bitcoin ETF.
And what Bitcoin allows people to do is control their wealth. Right? I don't need a bank, I don't need a broker, I don't need an insurance company. I can own my wealth as a bearer asset. Now, there are risks to that, but what an ETF does is it makes it in a easy-to-use, publicly tradable wrapper. The custody is done by a big corporation like Coinbase and makes it available to the average citizen. Well, the powers that be have not approved that, because they don't want the money to leave the traditional world and go into this new asset. But I believe they'll make an exception if one of their own, the largest asset manager in the world, gets to be the ETF sponsor. So, the Winklevoss twins were the first to apply for the application. They were denied. 2 companies that we have investments in, one called 21 Shares, one called Bitwise, have both applied. They've been rejected. So dozens of people have tried and been rejected. My guess is they'll give it to BlackRock because then they can control the rollout the same way they controlled the GLD rollout and things like that. So Bitcoin's a really, really good idea. Why? Because the most powerful people in the world hate it, right? Jamie Dimon says it's a fraud. He has 900 people at JP Morgan working in blockchain. 900 people on his payroll working for this thing that he publicly calls a fraud. Well, why does he call it a fraud? Well, because we don't need Jamie if we have Bitcoin. Here's the crazy thing. So Larry Fink, the CEO of BlackRock, was on CNBC about a month ago. And 5 years ago, he called it an index of money laundering. Bitcoin is an index of money laundering. He went on TV a month ago and said, Bitcoin is an institutional asset. It's here to stay. We're launching an ETF, and you probably need to own some to protect you from devaluation of the currency.
Wow, that's a big change.
I'm like, what? He's like, well, as long as you buy it from me and I get paid, then I'm happy for you to have it.
Yeah.
So Warren Buffett called it rat poison squared. And I'm like, what does that even mean? And secondly, how do you know what rat poison tastes like unless you're a rat, actually? But okay. But then Charlie Munger went one up on that. And Charlie called it, he said, trading Bitcoin is like trading newly harvested dead baby brains. I'm like, WTF, Charlie? Seriously? Come on. Why do they say that? Because 46% of Berkshire Hathaway is financial services. They own Wells Fargo, they own JP Morgan, they own Bank of America, they own these assets that they see the writing on the wall.
In recent times, geopolitical conflicts have become a catalyst for economic turbulence, prompting investors to seek safe haven assets. High market volatility has become a defining feature of cryptocurrencies. Wild price swings, which can result in devastating losses and substantial gains, make the crypto market a difficult place for the faint-hearted. That concludes our conversation for today. What is your stance? Feel free to share your thoughts in the comment section below. If you found this content informative, please consider giving it a thumbs up and subscribing for the latest updates. Thank you for being here with us.